The euro just hit a one-year low against the US dollar, and if you think that's just a headline for Europe to worry about, think again. Imagine a ripple effect that impacts global markets, investment returns, even the price of things you buy daily. The euro's drop and the dollar's surge mean more than numbers on a screen. They're signs of bigger shifts in inflation, interest rates, and economic policies that impact us all. In this video, we'll dive into what's causing the euro to tumble, what this says about inflation and the US economy, and, most importantly, how this could impact your finances and investment decisions going forward. Let's get started. First, let's break down what actually happened. The euro recently dropped to a one-year low against the dollar, hitting 1.0546, the lowest level since November 2023. This decline came right after the United States released its October Consumer Price Index, or CPI, which showed that inflation rose more than expected, reaching 2.6%. Inflation staying high means the Federal Reserve's fight against rising prices isn't over. As the dollar strengthens in response to this inflation data, the euro, and really most other currencies, are feeling the squeeze. Quick quiz. Which currency would you rather have right now? One losing value or one gaining strength? Easy choice, right? But what's behind this inflation story? And why is it fueling the dollar's rise while leaving the euro in the dust? Let's unpack it. Now, here's where things get interesting. This inflation isn't just a number, it's setting off a domino effect. Higher inflation expectations are pushing up US government bond yields, especially on long-term treasuries. In fact, the 10-year treasury yield has reached 4.47%, the highest we've seen since July. For those new to bond yields, here's a quick breakdown. Rising yields often attract more investors to buy US dollars, as higher yields mean better returns. This influx into the dollar increases demand, driving up its value against other currencies like the euro. On top of that, the US job market is still resilient, which only reinforces expectations of continued inflation and higher interest rates in the US. This stability boosts confidence in the dollar and keeps global investors flocking to USD-denominated assets. But here's the twist. This strengthening dollar may actually be a double-edged sword for certain investments and sectors. In fact, some are already feeling the impact. Let's take a step back and look at the euro's side of the story. The euro's struggles aren't just about US inflation or bond yields. They're also tied to challenges within Europe itself. Europe's economic outlook is bleak, with lingering political uncertainty and fears of a potential trade war with the US. Imagine being in a region where economic growth is slow and inflation is stubbornly high. European policymakers have fewer tools than the US to combat these issues. And with Trump's recent election victory, a stronger US dollar could create additional challenges for Europe's economy. Now, what does all this mean for the euro? Essentially, with fewer fundamental factors supporting it, the euro is under pressure, and a strong turnaround looks unlikely in the near future. The stronger dollar, fueled by US inflation and resilient job numbers, could keep the euro suppressed. Pop quiz number 2. Would you invest in a currency that's facing a bleak economic and political outlook? Thought so. And that brings us to the real question here. What does all this mean for us as individuals and investors? So, what does a stronger dollar and a weaker euro mean for you? First, the stronger dollar can impact everything from import prices to international travel costs. If you're planning a trip to Europe, for instance, your dollar will stretch further. But if you're a company that exports goods to Europe, this could actually make your products more expensive there, potentially reducing demand. For investors, the stronger dollar could impact certain assets. Think of commodities like gold and oil, which are typically priced in dollars. When the dollar is strong, commodities become more expensive for other countries to purchase, which can reduce demand and even impact stock prices in these sectors. On the other hand, US investors might see foreign stocks as cheaper to buy. And in terms of interest rates, the Fed's ongoing inflation fight means they're less likely to slash rates aggressively anytime soon, which can stabilize bond yields and continue attracting investors. But here's the big takeaway. There's an opportunity to leverage these shifts, especially if you understand the power of investing wisely during times of economic change. And speaking of smart investments, but here's the big takeaway. There's an opportunity to leverage these shifts, especially if you understand the power of investing wisely during times of economic change. And speaking of smart investments, to wrap up, here are three big takeaways from the story of the euro and the dollar. First, inflation is a key player, not just for the US, but for global economies. Monitoring inflation and interest rates can provide insights into how various assets, like stocks, bonds, and commodities, might perform in the near future. Second, a strong dollar affects multiple areas of our lives, from travel to product pricing to investment opportunities. It's not just about what's happening abroad. It has real practical effects on our wallets and portfolios. Lastly, if you're looking to make the most of your money in times of currency shifts, consider the importance of diversifying your portfolio. Holding investments that don't all move in the same direction can help buffer against currency impacts and economic changes. So, that's the lowdown on the euro's recent tumble and the dollar's rise. As inflation concerns persist and markets shift, it's essential to stay informed, be adaptable, and understand how these global events can impact your financial choices. And if you're serious about building wealth, there's one financial concept that's critical to understand: compounding. It's the real secret to growing your money over time. So, click on the end screen to check out our next video on the power of compounding. It's a game changer for anyone looking to make smarter financial decisions.